Hello, this is Paul Gibson with the Academy of Trading and Investing. Check us out at academyofti.org. I have 20 years of investing experience and also in helping other investors learn how to invest successfully. Today we're going to be going over advanced candlestick patterns. As you know, we did basic candlestick patterns in a previous video. In this one we're going to take a further advance to better understand how to interpret those candlestick patterns. Just to be clear, bullish confirmation patterns. Bullish confirmation means further upside through from a follow-through and can come as a gap up, a long white candlestick, or a high volume advance. Because candlestick patterns are short-term and usually effective for only 1 to 2 weeks of prediction, bullish confirmation should come within 1 to 3 days after the pattern displays itself. Remember that a trend is defined as 5 days. Or 5 periods. A period could be a day, and is most commonly a day in most analysis formats or tools. But it could be a 1-minute period, it could be a 5-minute period, depending on the sophistication of your tool and what your settings are. So make sure that you understand what your settings are when you look at your particular tool for analysis purposes. Then once again, just to be clear, bearish confirmation means further downside with a follow-through and can come as a gap down, long red or black candlesticks indicating bearish, or a high volume decline, which obviously is a sell-off. Because candlestick patterns are short-term and usually effective for only 1 or 2 weeks predictive purposes, bearish confirmation should come within 1 to 3 days after the pattern. Once again, a trend is defined as 5 days. We'll talk about what these confirmation patterns look like in the next slides. So, one of our basic candlesticks is called a doji. With the doji, as you can see, the opening and closing are relatively the same in each one of these cases. The opening and closing are relatively the same. In this case, we see that we have the high of the day here and the low of the day here. The opening and closing are somewhere above the mid-range. In this case, the high of the day and the low of the day, with the opening and closing somewhere below the mid-range. In this case, we see the high of the day and the low of the day and the opening and closing about the mid-range. There is nothing specific about telling us which direction that stock price is going to go tomorrow on any one of these patterns. We may infer that in this case specifically, there's really a lot of ambivalence here. We really don't know which way the stock price is going to go tomorrow. We might say in this case, it could go up or down, possibly more likely to go down, but we don't know. In this case, we might say more likely to go up, but we don't know. Once again, we want to look for confirmation. Here's a couple of interesting dojis. These are a little bit unique. They're often mentioned in analysis descriptions. In this case, we see what's called a Dragonfly doji, which has, once again, virtually the opening and closing are about the same, with a very long tail, or wick, or sometimes called a shadow, going in a bearish direction. And in this case, we see that we have the opening and closing here, with a very long shadow or candle wick going up. In this case, this is a possible bearish indication, and this is a possible bullish indication. We're not sure, because once again, dojis are ambivalent. Confirmation is always required for future trend predicting. Remember that. We want confirmation. So let's move on. Here's a bullish engulfing pattern, which means that we have a bearish decline of some sort. Doesn't matter what shape these candles are, but in this case the engulfing means that the opening and closing engulf the opening and closing of the previous day. So in this case we have a bearish candle followed by a bullish candle where the opening is lower than the closing of the previous day on the bearish candle, but the closing of this day is higher than the opening of the previous day. So the body of the candle engulfs the body of the previous day's candle. The wicks may or may not be longer. Kind of an interesting description. So once again, after a series of decline, we get a bullish engulfing candle, which is longer than the previous day's candle. Here's an interesting description of this particular pattern. This is called an abandoned baby. In this case, we have a decline in the stock price over the previous several days. Then we have a doji, and it doesn't need to be a doji, it could be just a short candle of some sort, but it's distance from the previous days and has what we call a gap. In other words, the opening and closing and high and low of the day were significantly lower than the previous day's low. And then the following day we have a bullish pattern, candlestick pattern. Once again, doesn't matter what the shadows or wicks are doing, but it is gapped away from that doji or small candle. So it's called an abandoned baby. This is kind of a rare pattern, but it does occur occasionally. And once again, we always want to check for confirmation. Here's a fun one. It's called a downside Tsuki Gap. This pattern looks like this. It's almost like we're forming an abandoned baby. Well, we have the previous trend downward, then we have a gap down, hence the Tsuki Gap. Then the following day we had a confirmation of possible reversal as we get a bullish candle the following day. This is a possible trend change. We don't know that, so we're going to look for confirmation. We'll explore confirmations in the next few slides. But this is a potential for a trend change. Here's a fun description. This is very popular, by the way. It's called the evening star. This could be sort of like an abandoned baby, but it's where we have that small candlestick or doji above a bullish pattern, and then the potential for a decline the next day. So it looks sort of like an evening star. Once again, this is a potential for a trend change. The star may or may not be a doji, but it will be a shorter star and it will be above the previous day and the following day. So there's a little bit of a gap between those two areas. Here's an example of the confirmation of a trend change. So in this case, we see that we have the evening star, very short candle between two other candles. They're in reverse pattern of each other. Here's a little more defined view to help us see that. Then immediately follow that, we see that we had a decline in the stock. So in this case, this was an indicator of a trend change. Here's a non-confirmation pattern, where once again we see that we have the evening star pattern, a bullish candle, followed by a gap up candle, then a bearish candle afterwards. But the trend after that is a bullish trend. So once again, here's a clarification of evening star. And then we get a bearish trend after that, after several days. This would be very confusing and difficult to follow. So as an investor, maybe we may want to be sure that we are confirming which direction that pattern is going to go in long term. And how do we do that? We wait. We're patient. One of the best and most critical traits or talents that an investor has is patience. We don't want to wait too long, but we want to wait long enough for the confirmation. Now here we have a morning star or doji. So in this case we have a bearish pattern with what could be called an abandoned baby, or in this case a morning star with a bullish representation the day after. Once again, this is usually but not always the case. It may be the potential for a trend change as we go from bearish to bullish. We see that there's a bearish, what's called a veering indication. It's veering in a different direction. So here's an example of a morning star where we see a bullish trend, then it changes into a bearish trend. We get that morning star pattern. As investors, we're alert now because we're getting that bullish indication. we get the confirmation the very next day and the following day. Depending on how much risk you want to take, you may want to set your sights to opening a position or buying that stock on this particular day. Then writing it up. Now we're getting almost an evening star indicator. We might be very aware of that and place our closing or sell-off position at about that level, or maybe the following day when we get the confirmation. Here's non-confirmation pattern, a little more clear representation. We see that we have a bearish condition going on here, consolidation or the morning star position. It looks like we might be getting a reversal, but we don't. On the third and fourth days, we're getting that bearish movement. When would be a good time to buy? That's a great question. Once again, we're getting another morning star here. We see that we get bullish confirmation the next day. The third day, we're not sure. We might place an order to buy at 1% above the high of that day, and if it moves up, then we're going to be engulfed in that candle. We can be in a very bullish position for a few days. We'll talk about trading strategies in another presentation. Here's what's called the falling three, where we have a bearish indication. Then we have three sideways candles that kind of fool us. We have an ambivalent candle in the middle, perhaps, and then we go back to a follow-through on the bearish side. This is usually a long bearish candle followed by what looks like a morning star with some ambivalence, and then we continue with the bearish movement after that. Here's a fun little pattern called a hammer. A hammer appears at the end of a bearish pattern. Then we get this short, fat candlestick with a shadow or wick that makes this appear like a hammer. This only occurs at the end of a bearish trend. This may be an indicator for a potential trend change. Once again, we want to make sure that we get confirmation after this pattern. Here's a fun one. This looks like a hammer, doesn't it? But it's actually at the end of a bullish pattern. Therefore, it's called a hanging man. I guess the analysts thought that this looked like a man dangling in the middle of the air. And this is usually an indication of a potential trend change with a bearish pattern following. Once again, we want to be very careful with our confirmations. A harami is a great little description of a candle that is bullish to begin with, a very long candle. It's almost like an engulfing candle, but the following candle is engulfed within the previous candle, and this is called a harami. It's an engulfed candle. Potential for trend change. We see the long candle, and then the following candle is the harami. We're going from bull to bear in this case. Another interesting pattern is called a matabozu. In this case, we see that there are no shadows or wicks on the candle in either case. So this is a bullish matabozu. This is a bearish matabozu. And once again, this is a potential for trend change. I call them pivot points. This is a possible pivot point. And we can see this. There's an example of how this might work. We're continuing along with a little bit of a bullish pattern here. We get a little bit of a bearish reversal for a few days. Then we get that harami in a bullish significant pattern, which indicates further bullish action. Once again, we get some ambivalence up here. Then we get that bearish harami, or excuse me, matabozu. And we see that we are now entering into a bullish function here. The matabozu, once again, is a candle with no wicks or shadows at the top or the bottom. Great potential for trend change. Here's a confirmation of matabozu. So in this case, we see a very strong matabozu here. It's a much longer candle than the average candle in the previous pattern. Gives us an uptrend. In this case, it's a bearish matabozu. Very long candle, much longer than the average candles. And of course, in this case, we get that bearish continuation. Here's a non-confirmation of a Motobozu. We get a bearish Motobozu here, but a sideways pattern afterwards. It looks like it's beginning to be bullish. The bearish Motobozu would indicate that we probably should be going downwards after this. In this case, we do not. So these are confirmation candles after the fact. In this case, then, we get the trend moving upwards. We get a breakout pattern here with some ambivalence. And we get a sideways pattern after that. So whenever we get a trend, this is called a breakout pattern. So if we were an investor, we might buy on the confirmation day. We're at the top of the Motobozu. If we're very, very careful, we may, or very conservative, we might wait for the third day confirmation. Then ride that trend upward. When we start to get some ambivalence, we see, aha, this could be a time to close our position. Even though we might have a little bit of additional upside here, we still would close that position to protect ourselves and garner our gains, if you will. Once again, this is Paul Gibson with the Academy of Trading and Investing. It's my privilege and pleasure to be with you today. I'm excited to be with you and help you with this process. If you want more information, you're welcome to go to academyofti.org. The next candlestick, Advanced Candlesticks 2, will explore more patterns to help us predict future trends. We'll look forward to seeing you there.